All right, welcome back to Street Smart. Well, the oil prices have fluctuated frequently this year, and since hitting a peak in April, Brent crude is down about 15%, almost in tandem, pretty much with stocks. But there's been a bit of a turnaround in the last couple of days, just like the one we've seen in the stock market. And the most actively traded Brent contract right now has jumped more than 4.5%. Well, could there be an even bigger rise in oil before the end of the year, especially if we see stocks surge, as a number of investment strategists are expecting? Well, joining us now is Gianna Bern. She's the president of Brookshire Advisory and Research, which focuses on the energy industry. She's also the author of Investing in Energy, a primer on the economics of the oil industry. Gianna, good to have you here on Street Smart. So will we continue to see oil prices rise at this point? There were some supply issues, right? Some pressure on supply over the last couple of days, which I think accounts for most of the spike. But of course, now people are maybe a little bit more optimistic given what has happened over in Europe over the last couple of days.
Yeah, that's some of the run-up that you see in Brent crude oil prices. There's optimism in the market. There's some hope that European policymakers will begin to rein in and keep a contagion at hand from spreading in the European markets. And so traders are absolutely, they are happy about that, and there's some upward momentum. But given that, I'd say it'll be a little bit more cautious going forward. The wild card is the U.S. economy and Europe. How does that all play out over the next several weeks? So Europe, at Brent crude oil prices, I'd keep them range bound in about the $105, $108 per barrel range on the top end, maybe on the lower end closer to $195 per barrel, in that range.
Do you see anything on the short-term horizon that could provide a potential shock on the supply side again?
I don't see any immediate shocks to the system. What we do see is Libyan barrels beginning to come back online. That's going to be a slow process. So, we still have Saudi Arabian production that is ramped up to fill the void of Libyan crude oil barrels. But as Libya comes online, it's going to be slow. I'd say we'll not see them go back to full production until 2012, 2013. So that, too, will keep some upward momentum on Brent.
In terms of a day-to-day, we've seen so much correlation across asset classes, particularly on headlines. Tomorrow we have a big economic release here. We have the monthly jobs report. If we see an unexpectedly weak number, do you think that we could actually see oil head down again?
It's entirely possible. The crude oil markets have been moving in lockstep with the equity markets, and traders are looking to see how is the OECD markets, OECD countries, how are they behaving? And if we see a weak jobless numbers tomorrow, we could actually see some movement downward. So I'd be looking out for that tomorrow as well.
So connect the dots in terms of when you see the actual commodity trading versus the companies that are working in this market. Give me some names of the companies that you actually like.
Companies that I like right now in this space, I like midstream names right now. And given the current environment, names such as Williams, Kinder Morgan, these are midstream companies. They focus on pipelines, storage, natural gas gathering, transport. I like those names. Those names have what I would say, the lower betas. They are less cyclical, and they have higher dividend yields. So those are names that I like in the current environment. I think those are what you would call my steady eddies, if you will.
Those are the steady eddies.
Yes.
Why not the riskier plays at this point? Is it, a lot of people are saying anything that was sort of in the risky category is so undervalued because of high levels of correlation at this point. Right. So exploration, production at this point, any companies within that sector that you like?
Yeah, there's several names I like. I do like names such as, Chevron, your Conocos, Exxons. They're all good names because their geology is good assets. I still like to look for good balance sheets, solid cash flows, lower levels of leverage, and they are. And at the end of the day, where these companies are operating makes a big difference. The regulatory regimes all over the globe, those all make a significant difference. But in the current environment where you see a lot more volatility in the markets, names such as your midstream pipeline companies, I think they offer some, interest rates are zero. So I think we're looking, as you look for alpha, I'm looking for higher dividend yields.
Which is a prevalent theme out there. The steady eddies seem to be in favor these days.
Right.
Thanks so much, Gianna. We have to end it there. It was so great to see you, though. We appreciate you joining us here on Street Smart. That was Gianna Bern of Brookshire Advisory and Research.